What's up? Good morning. We are 15 seconds out from market open here this morning. I'm all excited about it, man. We are coming in to the 29.2s. We'll see what the open here brings. Here we go. Best time of the day. Gonna get some volatility, of course. So ATR coming into the open, 22. So the average range here of a pre-market bar, 22 points. That's obviously going to increase. We'll see to what degree. Now remember, in the first 10 bars of the day, that ATR, which if you're new here, that number, see that red number says 24.8? That is the ATR, okay? That's the average range here of a 5-minute bar. So we'll watch that tick up. It's going to be artificially low for the first at least 10 bars of the day here. Right. Canada Joe, what's up, guys? How we doing? Gamma, my man. All right. There we go. All right, Bears taking us down through here. ATR already creeping up. 320 out here to the close up a big bar 1. Now, for me, the first trade, I'm waiting until at least after bar number 2. Roy, how we doing? Canada, yes, sir. Market open every day, big dog. We are here getting it done. 3 minutes. Okay, so overnight, obviously yesterday we kind of faded late day. You see that? You remember. We faded late day. We bottomed out early Asia session. And then we bounced hard. And we're now sitting kind of well above, a couple hundred points, give or take, above 29,000. But if we fade from here, the Bears obviously taking massive control on bar 1. We're 2 minutes out from the close of big bar 1. We're only 170 points away from 29, which proved to be a bit of, I don't want to say an issue, but it was certainly a region yesterday that did cause some kill-off of volatility until we finally pulled down through and away from it later in New York session yesterday. So we'll see if that comes back into play here today. But for me, best case, it's tough because we're choosing between 29,000 and 30,000. Obviously, there's a lot more room to 30. And as day traders, I'm just worried about today. So if we could pull upside, bulls step in, take control after the Bears probably close up a pretty sizable big bear body for bar number 1 off the rip here this morning. And the bulls could fade us back upside. We have lots of room. 800-900 points up to 30K. We're gonna eventually have to deal with 30K anyway, so I suppose that'd be my preferred direction here. Because I don't really want to deal with 29K again here today. If we have to, we have to. That's fine. It certainly hasn't been as extreme as an S tier level like 25K or 30K as far as ranging around it. But I'd prefer not to deal with it if we don't have to. So, bulls, I'll tell you what, man, that's your cue. Step on in, let's get to it. All right, there's the close of bar 1 into the open of bar 2. Give me 1 second here. I gotta find my earpiece. I walk in. I have no music in my ear. I walk in this morning. It's chewed through. So let me find my other one. Give me literally 30 seconds. You have got to be kidding me. I found it. I found it. We're good to go. Minute 55 out. All right. Okay, now, 90 seconds from now, and the floodgates are opened up for me, and I'm ready to go. So, again, after bar 2 is usually the earliest I'll be putting something on. This is going to be an inside close. We've got basically a sideways range here in the first 10-ish minutes of the day. At least forward looking to the close of bar 2 here. So we shall see. I actually am curious what the 2-minute looks like here. Let's take a peek over at the 2. Yeah, pretty much what you'd expect. Effectively a big range here on the 2-minute. Okay, here we are, rolling over into big bar 3. Game on, baby, let's go. Okay. So, opening range, we've got about 110 points-ish. It's reasonable. You know, it's not too bad. More volatility, the better here within reason. ATR creeping up to 36. It was, what was it, 22 coming into the open of New York, so we're getting some good volatility coming in. That will continue to creep up as these bars close and close and close. Javaz, big man, good morning. Good morning. Canada says, I'm usually hitting slots while I wait for setups in the morning. You're gonna save me some money streaming in the morning. Come on, man. Most of the time, day traders try to at least cover up the fact that they might be doing some gambling here and there. Our boy Canada just flat out admits he's at the casino in the morning waiting for trading setups. Josh, good morning, news. How are we? All right, now, by the way, a lot of people like to trade. What do you guys call it? I think a lot of people call it the opening range breakout. Okay, the orb, I've heard tossed around a whole bunch of times. Look, if you're making money with it, that's tremendous. I'm not saying it's wrong. What I am saying is, I think it's necessary or important to at least wait for, I don't like the word confirmation, because confirmation implies that the trade is a certainty, which it definitely is not. But more, we'll use it, confirmation, quote unquote, that the probability has shifted in the favor of breakout. So if somebody were going to trade the orb but wait for, let's say they trade a 5-minute chart, they're waiting for more of a traditional like ramp continuation trade outside of that opening range as it develops, maybe the 15-minute opening range, whatever they choose to use. That would make a lot of sense to me. If somebody is looking at this, you see this? And they're placing a stop limit sell 1 tick below the wick low of 1 to get short if we take out the tick or the wick low of 1 by a tick, and then they just risk the whole range. That's tough. That's tough for me to get behind, just because I know that, most of those breakout attempts are going to fail, not to mention you're risking the entire range for, what kind of reward to risk are we looking at? It better be huge at that point, which means the probability is very low. It's quite low because you're putting on the whole range in terms of risk. At least some people who trade the orb are. I'm not saying orb is a strategy. I'm saying it's just a thing that some people use with their own nuance, of course. I just think to make up for that probability, you have to go for a tremendously huge reward to risk, and the range on the day here is 115 points. So at least that more like 2, 3 to 1. More than likely, so you're betting on basically a huge bear trend to break out, which most days, today, if we see it, hey, great. But most days that isn't going to happen. Okay, so if you've been trading, what you think is kind of like opening range breakout style stuff, but that's what you've been doing, and you're struggling with it, I would think about that as potentially what's going on. Joe says, I find it works best if the stops are stupid tight. Yeah, see, that would make more sense. I prefer to use price action stops. And the first 3 bars of the day, you know, really your tightest stop is going to be bar 3. You know, but it's not really a trade that I would take personally. That doesn't mean that you can't take it. You know, again, I've never said my way or the highway type shit. It's just what I do is finally what got me out of the gutter here and allowed this to work for me. So I can only speak on what I do. If you make money trading the way that you're trading and it's different from the way that I trade, have at it. But just like for someone that's gone before you, if you are a bit newer to this, or at least less than 10 years, I tried basically fucking everything. Not everything, of course, but it might as well have been. And this is hard. You know, so I finally just had to learn, okay, I'm gonna read the context, because that seems to be pretty important here, doesn't it? I'm gonna trade price action, I'm gonna get rid of all these bullshit indicators that mean absolutely fucking nothing, by the way. And I'm gonna keep it pushing when I take a loss. 2 weeks, brute force discipline, you're gonna see a whole bunch of improvement. If not in your performance, which you most likely will if you're actually following a real methodology, but especially your psychology. Paul, good morning, how are we? So here, this right here, by the way, a lot of traders who, they might call this an opening range breakout. Now, I hope for their sake, just so that they make money today, because I want everyone to make as much money as humanly possible, which is the goal, at least here at the charts, right? I hope it works today. But I will tell you that what this is doing right now, if someone was sitting short right now, risking the entire range, like their stop is the wick high of bar number 1, which is way up here, most days, they're either going to get stuck in the trade for hours and hours and hours, because that's pretty wide, or they're going to get stopped, because this is a big trading range. They would need this to break out into a huge bear trend, which is why some of our friends in the chat here said they find it works better when the stops are tighter, because it lets you take profit in a mathematically suitable way without needing, you know, fucking 300 points downside, which is ridiculous. So there you go. If you kept your stops tight, maybe you're already covering, which is great. But again, if you're trading the opening range breakout and leaving things very, very wide and having trouble, that's what I would think about for you. Okay, we are 65 seconds out. Get rid of this. About a minute out here until bar 4 closes up. Okay, looking like we're probably going to get a little inside close here out of bar 4. There you go, Bear. It's not too bad. All right. I imagine here, now again, probability-wise, it's more likely that the bulls are going to fade it right back into the range, which I wish that we would turn this into a giant bear trend. It'd be tremendous. We'd take about 15 trades and win about, or at least I would take about 15 trades, maybe win like 11 of them. It'd be great. Probably looking at a range here. This bar is going to close up, roll over, head over into bar 5. and bulls fade it right back into the range. SR, what's up, my brother? How we doing? So, yeah, you know, you're going to see a lot of accounts blown here in this little range this morning. It's volatile. You know, we're 150 points wide now on the day. And it's volatile and indecisive. ATR is creeping up. We're up into the 40s now on the average range here of a 5-minute bar. It's still going to be artificially low because my ATR averages in 10 bars. We only have 5, right? So it's averaging in 5 after New York open bars, 5 pre-market bars. So that'll be artificially low, you know, really, I mean, to a lesser and lesser degree until we get to the close of bar number 10. But it's volatile and indecisive. When the market's confused, meaning in a single bar sideways range effectively, which is sort of what we're seeing here, why the hell would I not be, you know? Easy says the 5-minute bar breakdown failed. Yes, sir, it did. It did. Right back into the range. Nico, I'm about 12 points away from being funded again. Tremendous. These are the hardest 12 points. Seem like the closer I get. Yeah, you know what? If you care to share, how big are you trading and what size account is this? For me, if I'm trying to go fast, which is typically going to be the case with evals, again, you know, some people choose to just buy like a bunch of evals and just pin them against each other and fucking gamble on CPI. I don't know. I don't do that. I don't know. I can't imagine that a lot of these firms, like, I'd rather have self-respect and not do that, A, and B, stay in good graces with the firms, because, like, for all you know, they might just say, you can't fucking do that. I don't know. The 50Ks especially, you go higher up in position size, or I should say account size, they get more difficult to pass, of course, but the 50Ks especially you can pass them at a reasonable rate without doing that. It's not a big deal. But for me, I tend to size down into the finish line. I try to go relatively fast, just scalp through the evals. I'm scalping a lot more in those than I am the fundeds, and I'll size down as I get closer and closer. Because I'm investing more time in them now, right? Guys, with evals, my number one concern is not the cost of the eval. It's the opportunity cost of spending fucking weeks in an eval. I don't want to do that if I can help it, right? It's a pain in the ass. And now you're not spending time in fundeds. Now, of course, you could be trading evals at one firm, fundeds at 2 or 3 other firms, etc. But like, ideally, you would be spending as much time as possible in fundeds at all the firms that you trade at. So, again, I try to go relatively quick, and then I size down into the finish line as I have more time invested into that set or that eval. All right. Okay, so we got big bar 5 here doing a bunch of nothing. We're 20 seconds out. All right, man. Question, they say I have a consistent strategy that works, but as soon as I try to scale, my emotions make me fail. Any tips? Consistent strategy that works. As soon as you try to scale, your emotions cause you to fail. How much are you scaling would be my first question, first of all, because, and I take these questions very seriously. I'm going to think about what I say before I respond. Look, if you have a consistent strategy that works, let me assume for a second that you're trading prop, even if you're trading a personal account, but if you're trading prop, let's consider this. Your strategy may work at the size that you're trading, and then when you try to scale it, if you triple your size, for example, which is a lot, all of a sudden, the average kind of losing streak that you'll face consistently in that particular methodology that you trade and the way that you trade it, because every trader is going to have a little bit of nuance, you might take, I don't know, a 4-trade losing streak kind of often. And you can handle that at the original size, but at the bigger size, all of a sudden you can't handle that. Okay, I don't mean you, I mean the account literally cannot handle that drawdown. Okay, so you have to consider that. However, the way that the question was phrased, and this is more commonly the actual problem, when traders scale up, they start to do really dumb shit. Because you scale too big. You look at a number, let's say you're trading one contract just to keep the numbers easy. You're comfortable being a few hundred or even a few thousand points in the money or not. But when you trade to 3 contracts, or I should say when you scale to trading 3 contracts, all of a sudden that number is a lot bigger and you're uncomfortable with it. So what I've always told people to do is, emotionally speaking, if you're trading a certain size and on a scale of 1 to 10, emotionally, and this is where you have to be really honest with yourself, you're at like a 2. 1 is completely at rest, emotionally fueled wise. You're completely at rest. That's the equivalent of 1. 10 I would describe as like being chased by a hungry grizzly bear. Just absolute adrenaline junkie fueled. Okay. What I would say is you want to stay beneath a 4. Because you start getting up into 4, 5, 6, you're going to start averaging down doing dumb shit. I probably would too, which is why I always keep myself below a 4. So there is a size, by the way, that would drive me to fucking be a 7. I just don't scale to that until I'm desensitized to it. You guys have seen, I've always said be desensitized as early as possible to as big of numbers as humanly possible, as young as possible. Okay, so what I would tell you to do is, if you're at a 2, you can afford to take yourself to a 3, but you need to be really honest about, like, what does that look like as far as scaling? If you're trading 4 micros, that might look like scaling to 5 micros. Okay, whereas a lot of people, they'll trade 4 micros, they're like, okay, a mini. Your account size, whether it's personal or prop account, might not even be able to handle that. So that's a logistical issue. And B, that might take you emotionally from a 2 to a 7. So now not only your account size can't handle it, but psychologically you're an absolute disaster mess. Okay, now this scale of 1 to 10, it doesn't do anything unless you're just genuinely honest with yourself. So if I was gonna like size up right now and take a trade that I know would probably put me at a 5, I would not size up to that level. I'm always trying to stay beneath like a 4. A 2 or a 3 is tremendous. A lot of you guys, I'll tell you what, you are trading day to day, I promise, at like a 7, 8, or 9. And then you're like, why am I so emotional? Because you're not desensitized to those numbers yet, big dog. Okay, keep below a 4. I think you're gonna see a lot more success, and it's gonna make it a hell of a lot easier to stick to your methodology, I'll tell you that much. So, still waiting here for the market to make its move, man. We're basically going sideways. We got Doji on 4 and 5. Trading Bars says, funded big dog. I'm now 2 for 3 at passing evals, only failed 1. I'll get to that. Now just got to a payout. Now just got to get to a payout from this one. Time to buy another one. Code BIG. Of course, my man. Now, first of all, what I would say for all you guys, not just him, is don't trip on the amount of evals you've failed. Who gives a shit? They're too cheap to care that much. And I get it when you first buy your first like 2 or 3 or 5 or 10 or 20 evals, you kind of want to pay attention to what your win rate on those is as like an ego thing. You're like, I'm only a good trader if I've passed, you're telling yourself this. You're like, man, this is my 10th eval. I'm only a good trader if I've passed 7 out of the 10. No, dude, you're a good trader if you're making money and providing for your family in the way that you believe they deserve, or at least on your way to doing so. Which has absolutely fucking zero to do with what's your pass rate on the evals. No. What's your ROI on prop trading? That's what matters. When you go to pay your light bill, the company's not going to say, all right, dude, let's work something out. I'll tell you what's your pass rate on Apex evaluation accounts? And you'll say, oh, I passed 8 out of 10. They'll say, okay, then why the fuck do you now have money to pay the light bill? By the way, they'll say, what's an Apex evaluation account? It doesn't matter, dude. There's no ego. Just, you should track it. I think you should track it, but track it in the form of your expenses and revenue generated. Don't track it in the form of how many evals have I passed and failed. Who cares, dude? What's your ROI? That's what matters. Still inside here on bar number 7. What size to use for a 50K evaluation account? It depends on the volatility and how aggressive you want to be and how good your ROI is. If your ROI is 0 or negative, which is fine, by the way, like some of you are like, my ROI is negative, dude. Thanks a lot. Now I feel like shit about myself. It's okay. Just get to it being positive and then fucking scale it. What are you gonna cry about it? What size for a 50K eval? If your ROI is massive, trade a mini. Your pass rate's going to be good enough, even trading a mini, and your biggest concern is opportunity cost and time spent in the eval. If your pass rate is 0, or I should say, if your ROI is 0 or negative, and your pass rate, you've never passed an eval before, there's something wrong in the methodology and the decision making. So then you should trade 1 micro and use it as a way to find positive expected value rather than an eval that you're actively trying to pass. Okay, now if you're unsure and you're somewhere in the middle, you're like, no, I think I have positive expected value. My ROI, I just haven't really taken payouts yet, but I know I can get there. 3 to 5 micros, I think, for a 50K eval. Because, you're not really in the driver's seat to really push it aggressively and let the pass rate on evals naturally slide down a little bit, because they will as you get more aggressive with them. But you also don't want to take a fucking month. All right, Bear's finally trying to take us away from this little trading range. We shall see if they can. Question, do you have a set dollar amount that you risk per trade and adjust size based on how big the stop loss will be on the trade? No. No, for me, honestly, I think you guys probably should have a rule like that where you adjust size. But the problem is, if you go equal dollar amount risk per trade, then you're completely ignoring what I've talked about on the channel a lot. I just posted a video on it. I don't know, yesterday? There was a video posted to the channel on exactly what I'm talking about, which is sizing, exponential bet sizing, just a day or two ago. And if you risk the exact same dollar amount per trade, you're ignoring risking more dollars on the trades that have more expected value. They're better trades. Okay, just to make the verbiage easy to understand. For me, I just know what ballpark I need to be in as far as, based on the account size or whatever. And I'll adjust my sizing accordingly based on the quality and the volatility. However, you don't always need to adjust your size, because what will happen a lot of times, you guys probably understand, and we're getting deeper into like tomb stuff, so I'll keep it brief because I know you guys don't necessarily want to hear it here on YouTube. But what a lot of traders don't really understand is the market can adjust your sizing for you. You have two ways to kind of adjust your size. You can leave your size the same and let volatility increase and not decrease your size, right? Because that now you're putting on a bigger amount of risk in terms of points. So your risk has increased, but your size has remained the same. And then when the market starts ranging again and you're scalping, if volatility has come down a lot, the market is doing it for you. It's already decreasing your risk per trade, which is necessary when you're like range scalping. Now, if the volatility isn't fluctuating much, but the market environment is a lot, then you may need to actually adjust your sizing, or you can do a mix of both. But it's not necessarily only position size. It's position size and volatility, and you get to pick whether you do one or the other or both to, size yourself properly for that particular trade. But unless volatility is doing something crazy, I typically, probably more than half of the time, not all the time certainly, but probably more than half of the time, let the market volatility kind of adjust my size for me. At least lately. All right, here we go. Good, good, good. So we got a big giant range. Okay, bar 8 for me would absolutely about 1,000% be what I would call the early trade. Okay, but that doesn't mean I'm uninterested. So let's zoom in and take a peek. Okay. Stop limit sell goes out. See if we can close beneath the wick low of 7. Come on, Bears. Place him. Good. Roll over. Let's see if they can take it. If they don't want it, I don't want them, by the way. If the bulls just fade it right back up into the range, there's a reason I use a stop limit sell and don't just mark it in on the short. $25 seconds, no fill, no trade, pull it, watching bar 9. No fill on that trade, no matter how much time you give it, really. Okay, let's see if bar 9 can give me a nice clean close. That would actually improve the quality of the setup anyway, which would be tremendous. Hey, by the way, man, if you haven't, I appreciate you hitting the like button here on the stream. Or dislike, big dog! So you see the bulls already sucking us back upside. Inside the body of bar number 8. James says, I'm in short. Well, I hope it fucking tanks about 300 points for you, James. We got a minute 40 out. So you see the bulls just popping this baby right back inside, up toward that sideways range we saw from 4, 5, 6, 7 as far as the bar count. Mario, big dog, how we doing? So, you see this. I mean, look, bar 8. A lot of you newer RAM traders, I'm not going to say this is so wrong, but if it was done out of impatience, then it was wrong. A lot of people, what they'll do is they'll see bar 8 close up. They'll say, yeah, it's the early trade. I know it is. First bar to close outside this range. It's the early trade. I really should give it a stop limit sell rather than just mark it in. But I'm impatient. I just want to get involved. So you hit it short with a market in. You'd actually still be in the trade, which is interesting, but you would have taken out a whole bunch of heat. And this hesitation, regardless of how this works out, this hesitation just, if it doesn't take out the wick low of bar 8, especially on an early trade, or the wick low of the signal bar, we'll say, especially when it's the early trade, first bar to close outside of a range, even as part of a continuation sequence, it's tough, man. I want to use a stop limit entry. Which, by the way, if you don't know what a stop limit entry is, like a stop limit sell, for example, I put it out below the market, you see that? That is not a stop loss, which is confusing as all hell for people. That's a live order, by the way. If the market shot down right now, I'd get filled with over 100 contracts on the copy trader. That's not a stop loss. Okay, that's an entry order. Never use a stop limit order to manage your risk. It's an entry order. So I'm able to put it below the market, and if the market shot down and hit it, it would fill me to the short side. That makes sense? A lot of you guys look at that, you probably think it's a limit buy. No, it's a stop limit sell. That's an entry order for continuation trades that I use all the time here on the live and just in general. But for like reversion scalping in a soft bull channel, let's say, or any kind of range, I'll typically enter with limit orders. All right, Bull's taking us back up through that range now. Remember this? Bar 4, bar 5, bar 6, even bar 7 if you want to include it. Sideways. Bar 1, 2, and 3 sideways as well. It just started to fade downside a little bit. Really, I'd call these two big sideways ranges. Bar number 10 now, speaking of which, we're now getting to the point where as bar 10 closes up, we have a true ATR read on the day, because then every bar that's being averaged into that ATR number, which is the average range, that 59.22 red number, bottom right of the chart. Every bar being averaged into that is an after New York session open bar rather than including pre-market bars, so it's a real read on volatility. It's no longer artificially low, including pre-market bars, right? We don't want that. Because it includes 10. It looks back at the last 10 bars to get that number, okay? So the bulls now are taking us right back up into that range. Worst case scenario would be we kind of stall out and do this. We don't want that. Bulls want to take it, take out high a day, keep going, tremendous. Bears want to fade this thing, take out low a day, keep going. Man, even better. Even better. Just not sideways. Okay, bears fading us back here. Good. Good. Get us away from that previous little area of interest as far as the range is concerned. That would probably kill volatility. I don't want to see, if 59 were the peak volatility today, I'd be not too happy about that. Especially if it faded quick rather than maintaining the 50s for a couple hours. Two minutes! 2 minutes till we close up a big bar 11. Come on now, man. Bulls, Bears, we don't have time for this. Got fucking bills to pay, man. Let's go! Alright, 43 seconds out. I really hope this rolls over and fades. If this pops, we're kind of fulfilling the prophecy of this guy. Just a full day's range, trading range, which is fine. It's actually not the worst case scenario. I can still catch some things in there. But it would be a hell of a lot easier if we could just roll over, maybe see this as more of a soft bear channel. And I would actually be interested in taking continuation down through the wick low bar 9. Which also happens to be low of day. All right, we got audio? We should now. Okay, big bar 12. We'll see how we close up here. We're 10 seconds out. Well, the problem is we're so right in that upper third of this big intraday range. Range on this bar, we're up to about 80 points, high 70s. So I'm going to go ahead and watch bar 13. We shall see what we get. You see, the hard part here is that we're like 25 points away from a stop hunt of the wick high of bar 1. Okay, and while a lot of people, you're like, man, a stop hunt, that's tremendous, we should take it. Well, for me, we're 25 points away. The risk that I would have to put on is damn near 80 on bar 12, because I would risk the signal bar, right? So, unfortunately, bar 12 is just a little sizable compared to the full day's range. For that to set up in a way that makes mathematical sense. Unfortunately, I would love to take it as well. But for me, I gotta wait on bar 13. And see what we get. Okay, now if 13, even though it's a little bit higher, if 13 could stay as a small bull body, then the risk is a lot more in line with how far away I am from stop hunting the wick high of bar 1, which is currently the high of day. And you know there's also a lot of stops up there, which are what? What kind of orders are they? Right above the wick high at 1 that we know for a fact are there. They are market buy orders. Because they're stops for shorts. Which when triggered act as market buys. So it's tremendous. Let's see if we can get a nice clean close out of bar 13. And I would like to go hunting here this morning. Come on now, bulls. Do it to them. 60 seconds out. We got that wick high up around 29,246-ish. Keeping an eye on that. And looking to see if we can close this guy right around here. That keeps my risk a lot more in line with the distance we are away from that stop. Come on, bulls. Don't grow that too much more now. 35 seconds. They're trying to thread the needle. All right, ready? Oh my goodness. Bunch of baby bulls here. Come on now. Oh, you see this? You see this? Bar 13 closed right at the wick high of bar 12. You think that's a coincidence? Not a chance, big dog. Not a chance. Bulls are insecure. And when the bulls are insecure, I'm not betting on the bulls. Especially not in the upper third for a stop hunt. That's a damn shame. Is anybody in a position right now, by the way? Are you guys sitting long or short or flat? By the way, if 14 hesitates up here, that wouldn't be all that surprising. Flat, flat, long, long. Got a few buys on the table. No one's short? At least if they are, do they want to admit it? So far, these bulls have had us about 10 points away from the high of day, which is the wick high of bar 1. And now they can't seem to get the guts to go take it, so... yeah, pulling away deep now. Starting to get some ideas. You know, if we end up going sideways and then get, of course, a continuation back downside, I'd short it. If we got sideways and we're close enough but not taking the wick high of 1, I could actually make sense of shorting it using the wick high of 1 as a stop for, you know, one of those traditional lower probability, higher reward to risk type trades. But obviously, the deeper the bears pull back in, the bigger that reward, or I should say the bigger the risk gets, which drags that reward to risk down. Which makes it tougher for me to take that short without an actual continuation setup, if that makes sense. Fishman, my man, how we doing? Good to have you. All right, we'll see how bar 14 here closes up. 10 seconds out. The bears hold it beneath the wick low of 13. Look at this. 14 is going to close inside the wick low of 13. Did you see that last second they gave it up? Insecurity here. Bar 15, though. I'm watching 15. Chat, reaction says, I only buy lows and sell highs. Yeah, in a range, that makes a lot of logical sense. They say brain doesn't understand or get continuations. Yeah, that's the truth for most traders who are newer or intermediate. I'm not obviously sure of how long you've been doing this, but that's how my brain thought too early on. It was hard for me to make sense of continuations until I developed RAM as a strategy and realized my continuation trades pay me the most money. It's hard to wrap your brain around if the market is going higher and gives you a good setup. It's really hard to wrap your brain around buying high of day. I'm not saying that's just the strategy, is buy high of day. That's not what I'm saying. But a lot of my RAM continuation stuff in a bull trend, I will be purchasing high of day, literally the tick high of day, because I'm putting a stop limit buy above the wick high of the close of a signal bar, which happens to be at high of day. And a lot of people, they fucking lose their mind about it. And I love it. Because for me, that's my best setup. It's tremendous. But I get it. It's hard to wrap your head around. Though over time, with more and more experience, I think most traders come to the conclusion that they need to get over it. Because the market isn't, while a lot of the time the market is in a range, it's not always in a range. The buy low, sell high mentality is my default when I assess the context and say it's in a range. But I'll also tell you, early on, in the early years, most of my blowups came from looking at a trend and saying, it's gone really far. I should probably go counter trend. And that's the case for a lot of you guys as well, I'm sure. Chat, you get that day about once a month that just won't stop? Yeah. I'd say at least once a month. Yeah, at least. And you know what? If you're arbitrarily buying low and selling high without too much risk management going on, that's great. But if you don't know when to manually cut it, that day's coming. You guys, like, I've been down the same cycle, like, many times. I've been down all of these cycles. My footprints are in the path that you're currently walking. They're there. You will make money trading ranges for weeks. But then when that day comes where it's a trend that is just fucking brutal, you will continue to average it against the trend because that has what's worked for you in the past couple days or weeks, and then you will blow up. You're not the first trader to do this. I'm telling you. I'm sorry to say every mistake that you've made, everything that you think, man, I just got this shit figured out. You're not the first one to do this. Everyone's been down this path. All of these paths. There's a lot of really smart people who are into trading. I promise you that the little mistakes you're making or the little things that kind of blew up in your face that originally looked like they were going to work, there's a lot of smart people in this industry. We've tried all of them. And a lot of traders, they end up settling on one sort of logical thing. For me, it was RAM, which originally never had a name. It was just how I traded. All right, we got 16 rolling over into 16, bar 16 that is, about 5 minutes out from the close. ATR sitting 53. Chat, they say I find continuation buying high of day doesn't work as well as selling the low of day. What do you think? Well, the difference is small but real. It's the stairs up, elevator down type mentality, and it's 1,000% still worth taking the continuation stuff to the buy side, to the long side, to the upside. Yeah, it's a new high a day, by the way. But yeah, the short side, if you took 1,000 examples of each trade, short continuation, selling low of day, or long continuation, buying high of day, the short continuation would perform a little better over a huge sample size, but they would both perform well. And that's just because of human psychology and the way markets move upside versus downside on the averages. Nico, you already waited 70 plus minutes, but you don't feel a compulsion to take trades. As you said, no trading days are normal. Well, they're okay. I wouldn't say they're so normal. They are acceptable. Normal implies that it happens like every week. I certainly don't have a no trade day once a week on the averages, but they're definitely going to happen. And when they do happen, yes, they are normal. So build them in, don't trip out over a no trade day. By the way, when I say that, I do not expect today to be a no trade day at all. I'm just waiting for my an opportunity to come around here. I'm definitely not the one trade a day type. I think that that's goofy, and I think it's lazy, and I think it ignores the math behind how traders actually make money. A lot of people, you know, they come in. How many of you, by the way, let me just get a show of hands and I'll share my opinion on this in the chat. How many of you are of the camp that you are only a day trader so that you can work like 30 minutes a day? Is anybody here in that camp? Like the primary reason you're here is so that you don't have to work much. Whole bunch of no's. Well, good. You know, the old, I think that dream, I gotta tell you guys, I think the dream of like, trade for 25 minutes a day and make 3,000 on the fucking beach. First of all, I mean, come on, dude. Like, I think this comes from those fucking stupid ass early 2000s internet day trading ads where they would sell you not on, hey, here's a logical thing that I learned, let me help you, because like being a trader fucking sucks and I'm gonna try to like fix that for you. At least in the early years, it sucks. Once you actually find a repeatable methodology, it's fucking awesome, as we've discussed. But the early years when you're not finding success sucks. Those ads back then were not that. They weren't, hey, here, I found something that works for me, like pretty fucking well, let me share it with you. No, it was how I made $3,500 on the beach this morning in 22 minutes. You can work a half hour a day and make $1 million a year. It was just ridiculous. And it sold everyone this dream of, wow, I really hate working. I would love to make $1 million a year without working very much. I don't want to like, I don't want to burst anyone's bubble here if you are in that camp, but I'll tell you something. Don't be a day trader if you don't want to work more than 30 minutes a day. You don't have to work 12 hours a fucking day, dude. That's not what I'm telling you. Okay, but a few hours a day sort of should be like your minimum. If you're here because you're like, I just want to work 20 minutes a day and be a lazy fuck and go lay on the beach all day, first of all, you're going to be wildly depressed. I give it 6 months because you're doing nothing and the beach is only fun for a little while, and then you're pissed. Because if you're here and you're, you know, you have aspirations, you're not going to enjoy that lifestyle. I'll tell you right now. You're going to want to be working. But second of all, a few hours a day, like sometimes you have to wait for the opportunity and you have to get the sample size up. The whole one trade a day thing, okay, some days you're going to have no trade days. So you're telling me you're going to take about 225 trades a year. A year. That sample size needs to be way higher. Way higher, dude. Otherwise, the numbers, you know, the law of large numbers, you want this expected value to work out predictably as often as possible, which means take good trades as often as they present themselves. Which is what I'm currently waiting on here. So come on, bulls, bears, somebody. Hit me with it, I'm ready to go. ECT Capital says, I just want to buy a Lambo. Fuck, man, get it. Get it. I hope you do. I hope you do. But, you know, also at the same time, it's going to be, I promise you, it's going to, Taylor's oldest time, it's going to be fucking awesome, dude, for 2 weeks. You're going to sit, you're going to look at the fucking steering wheel, you're going to fucking lift up the red thing, press the button. You're going to be like, this is awesome. And then 2 weeks later, you're going to be like, this is still pretty awesome, but, you know, it's a car. I love it. But, like, let's keep pushing. Guys, progress has always been the goal. The goal, you will find if you have not yet, and a lot of you probably have already found this, progress is the goal. These things along the way are checkpoints. That's not the finish line. You hit the checkpoint and you turn the corner and there's like 1,000 more checkpoints. And you're like, oh, I just want to keep playing. The things along the way are fucking cool. They're great. You love hitting a checkpoint. It's fun. That's kind of like part of the point here. You want to have fun. You want to have a good life, but you want to also like keep playing. That's kind of the big point. Acquiring the stuff and the stability and the financial security and freedom, if you want to say that, those are all checkpoints. You want the checkpoints. The checkpoints are necessary and they're fun and they will make you happy, but it's also, especially the material things, are fleeting. So don't make that the goal. Fucking get the Lambo. I promise you, it's going to be cool. But don't make it the goal. The goal is progress and to be able to keep playing the game. You should be here because you love trading. If you take it very seriously, this can provide you with all of those checkpoints, but don't make a single checkpoint the goal. You're worth a hell of a lot more than a $700,000 Lambo. I promise you. You gotta shoot higher, dude. All right, we got bar 17. Question, Nico, what do you think of penny stocks? Actual penny stocks or small caps? Penny stocks, I don't like penny stocks because the spread is too wide on a lot of them. Liquidity isn't really deep enough to be able to trade them with any kind of effectiveness. It's hard to take a big enough position in actual penny stocks without, taking on bigger and bigger spread risk, we'll call it, because you're eating up the liquidity so fast because not very many shares trade. So you could probably make a little bit of money trading pennies, but there's also issues with pennies, which is they're so illiquid a lot of times that they're just manipulated to all hell. It's a huge problem. Small cap stocks between $2 and $20 a share, honestly more like 2 and 50, maybe 2 to 100, but sweet spot kind of 2 to 10, 2 to 20 are great. But they're really hard to trade. You can get a lot of edge on them. That's because they're really inefficient. But they're also very fast. If you're not a fast trader, if you're not incredibly fast on hotkeys, you won't do very well in small cap world. And I don't think you should even explore it. There's a lot of things to trade, guys. Futures, I will say, these are, I would say, from a day trader's perspective, the most optimized instrument to make money as a day trader. Okay, small caps, you've always heard me say, when something is liquid and inefficient, there's opportunity to find edge. That's why you can find edge in small cap stocks. You could theoretically, dude, if it was easy to trade crypto and the fees were basically like the same as stocks, and you had direct access and you could be filled as quickly as you can with a direct access broker in stocks, but you could do so with these shit coins, and the fees were very little and they weren't being rug pulled, and the commissions were reasonable and liquidity was deep, you make a killing trading these shit coins because they're inefficient as all hell, and your competition is a bunch of people that are trying to buy and hold and hoping it hits 10,000x. But that's not the reality of these shitcoins. It's just a bunch of weirdos sitting in their bedroom trying to rug pull you with massive commissions and fees and huge spreads. It's ridiculous. All right, we've got, so we took out the high a day and now we're basically in a sideways range. ATR is 50. All right, 37 seconds out until the close up a big 18. We've got a slow grind, whole bunch of inside closes. 13 inside close, you guys remember that? We talked about that one. 14 inside close, 15, 16, 17, all inside bars. What is an inside bar, by the way? It means it closed inside the wicks or the body of the A bar, you know, shortly before it, or the immediate bar before it, which is effectively a trading range, right? Some form of trading range. Here we have a very, very tight, what looks to be single bar, tight, doji, nearly bull channel, which is incredibly difficult. You know, how many accounts do you guys think were blown between bar 13 and 18? Whole bunch. Whole bunch. So we got big bar 19, a new opportunity every 5 minutes. Let's watch 19, see what we get. Ideally, if we can get a nice clean bull body, closing above the wick high of 16. All of a sudden, I'm in the driver's seat, ready to rock. Come on, bulls. Goodness. So, you know, as far as scalping this little range, the most logical areas that you would think to manage risk would be below the wick low of 17, below the wick low of 15, neither of which are particularly good options, which makes this tough. All right, hey, stick around. 2 minutes. Be right back. Man, we're catching trades. Don't you worry about it. Bulls knocking on the door here. The wick high is 16, which is also high of day. Let's see if they want to take it. There they go. New high of day. Bar 20 is going to be that new high of day. Now, this is hard because it's so soft. Here, let me set that down so I can draw. This is so soft, right, that I think it's almost more important to look at it just like this. At least for now. At least for now, which makes it obviously very tough to get long on a breakout like this because it is currently a range. Phoenix, how we doing? How we doing? So we'll have bar 20 here closing up. 90 seconds out, and we'll see what 21 can bring. I want to see 20. If we can close 20 above the wick high of 16, that'd be great. That would be great. ATR maintaining 54, by the way. Chat, when is the entry? My entry or entries are as soon as I get my opportunity or opportunities. I tried price action, so there's no like number. I'm not saying, oh, if we hit 29.3, I'm gonna get short. Trading price action. So, by the way, if you're newer here, this is a 5-minute NQ chart that we're watching. Okay, we got bar 20 rolling over into the open of 21. Watching bar 21. Things looking up a little bit here as far as price action. Now, obviously, bar 13 through 19, ugly. Big sideways range. 20 is the attempted breakout. Now, we got to see if 21 can maintain that breakout. Question, do you use candlestick patterns? Kinda. Not in the traditional sense that is typically taught. I'm not typically looking and saying, wow, that's a head and shoulders, I should do X. But if you wanted to call a 2 to 3 bar continuation setup within the context of soft bull channel, soft bear channel, or bull trend or bear trend as a candlestick pattern, then sure. Sure, but really for me, it's just a price action based setup, though it must fit the proper context to use it in. Like, I would not take a continuation trade, you know, in a single bar sideways trading range. First of all, it wouldn't set up like that. Second of all, the context is wrong, right? You know, think about it, guys. If you are newer to trading in general, I had to learn all this stuff too, man. Again, you guys, you know, you're not first in any of this. There's been a lot of very intelligent people who've gotten into this industry and tried just about everything. And then some people succeed and make it work for a lifetime, right? But how many of those have you really heard say that their strategy, their methodology, the way that they trade full time is to, yep, I just log on each morning, I look for head and shoulders, or I look for this or that, and then I do X. That's on every printed out candlestick chart pattern cheat sheet that you can buy on Amazon for $3. And that's what I do, and I make a living doing that. I haven't heard it. I haven't heard it. It's typically a little bit more contextual, we'll say, than that. And I think you should consider that if you're planning to do this for a living. Which I think you should aspire to do this for a living if you love trading. If you don't really like trading that much, you just want to make a lot of money, then go make a lot of money somewhere where you will make a lot of money. Because if you hate doing this, you're not going to do very well. But if you love trading and you're like, man, I also want to make a lot of money, just, I think about that. Use your head a little bit and say, yeah, he's kind of right. You don't really hear that too often. It's usually a little bit more contextual. Okay, ATR 53, range on this bar about 30 points, 31 points. Watching big bar 21. Let's see what it's got. Chat says there's many clickbait type clips doing so. Like the only pattern you should recognize or the only one entry. The only entry that can bring you millions, yeah. You know what? First of all, hang on here. I gotta look at this. But I do want to touch on that. All right, 13 seconds out, let's see. 10 seconds, stop limit buy goes out. Give me a nice clean close bulls. Place him, bulls roll over, take it. Good, and they will. I'm sitting long on the close of bar 21, open of bar 22. 29,268 and a quarter is where I need to put my stop, and good. See what the bulls got, accept the outcome, move on. Question, no concern for the round number at 29.3? No. No, if I was concerned about 29.3, I'd never take trades. At every 100. So as far as like clickbaity, what a lot of people would think of as clickbaity trading videos, clickbait gets tossed around a lot. I think it's only clickbait if you say, I jumped off a 100-foot bridge. And then you click on the video and they didn't do that. It was just a lie. That's clickbait. Sprucing up a title, I don't know if it's clickbait, it's more like effective. Now, you will notice that I don't make videos like that, and the reason I don't make videos like that, even though I know that I could make videos like that and they would do very well, is because I would collect a lot of unserious traders, which I'm not interested in doing. So there's different paths you can take in this. There's going to be a lot of channels whose goal it is to just get as many views as possible, but the problem is you end up with a lot of people who haven't really thought about day trading very much, and they think, wow, it sounds like easy money, I should get into that. And then they're just disappointed when they realize that this is actually a profession that, yes, you can make actually more money than you thought you could, but it's also going to be maybe a bigger time investment and actually a real sort of like job or occupation or undertaking. It's going to be more of that than you thought it would be. And then people get disappointed, then they leave. I'm trying to collect motherfuckers, right? Guys who are like, and women who are like, I understand what I'm getting into. No, I get it. Like, this is an undertaking. I am going to change my fucking bloodline and use the market to do so. I want those people. You don't get those people with this one chart pattern will make you $100 million. It's just goofy. It's not trading. You know what I mean? But I like that people make those videos because it gets more people into the industry. And we need more people in the industry. We want more retail traders because PDT never would have been changed. You guys fucking know how I feel about PDT. PDT never would have changed. Ever. If 2020 and 2021 didn't happen and a bunch of people came into the market and said, what is it? This rule is bullshit. Because why would it have changed? So the more retail traders we get in the space, the better it gets for retail traders because, you know, there's more demand on what we need as retail. And those changes then come. So as many people as we can get into the trading industry as possible makes it better for you and for me. Come on now, Bulls. Let's get this guy pushing, baby. All right, ATR is 50. By the way, I have less than 30 points of risk here on this trade, so that's almost a half ATR of risk. So that's tight compared to the current volatility. They're just trying to pull it on back here, having a little bit of trouble with the middle of the body, bar 21. All right, there we go. We got a rollover. Bar 22 turning into bar 23. ATR down to 45 on that last bar. ATR dropping quick. We'll see. Again, my risk here is managed right beneath the wick low of 21. All right, Bears, let's see if they can take out that wick low of 21. If they want my stop, they're going to have to earn it, big dog. So what you got, Bears? Now, again, my risk here, less than 30 points, ATR 46. That's not a lot of risk, at least, you know, for me, compared to the volatility that we're dealing with here. So this is relatively tight here, which is fine, which is cool. See if these bulls can step in, they'll get the job done. There's some volatility, man. Yes, Trump is speaking. We're getting some headlines here from Trump. But I'm not really, that's okay. I'm fine with that. we're always getting headlines from Trump. And if it were I would say a more predictably highly crucial speech where he's going to drop a bomb and it's going to be 50-50 with massive volatility, almost certainly in either direction, then I would be flat. But, you know, little headlines come out all day long, so I try not to worry about them too much and accept them as part of the risk of trading intraday. Jonathan, my man, says third green day in a row, riding that high but staying humble. Kill it today. My man, good work. Good work. All right, Bulls. Say it's about that time, man. Okay, we've got a rollover. Even if we do take out the wick high at 23 here on the open at 24, I still can't move my stop, and it really wouldn't move it very much anyway. ATR on that rollover, by the way, updating to 44. Not down too much. We were at, I believe, 45 on the last bar for most of the bar, if I'm not mistaken here. So ATR maintaining that mid-40s. All right, so risk on this trade just under 30 points again. That is 1R, just under 30 points. Call it 30 points with a tick of slippage or so. Three minutes left here on bar 24. Well, let's go, Bulls. Let's keep that guy pushing, man. Let's keep that pushing. So, by the way, we have seen a lot of range action today, so I'm thinking about that. Not to mention, if this does turn into a big bull trend, it would be early, because I would kind of start looking at it as such after a sustained breakout of the wick high of 1, the wick high of 16. Here, the wick high of 1, the wick high of 16. All right, 60 seconds left here on bar 24. Okay, there's the rollover 24 into 25. So now paying attention here to 25. Well, the Bulls have had me as high as, I don't know, what, 21-ish points in the money? Not enough. Going basically sideways here now. All right, my risk is managed right below. Whoa! The wick low at 21. Bears stepping in. Let's see if they clip me, and they will. All right, so I was about, I think 21. It might have been 22 points in the money on bar 24. It wasn't enough, and the Bears fade us right back into what was not at time of entry, but what is now looking like it may become a new single bar sideways range, which is kind of the story of the day here. Is little single bar sideways ranges, which is why there hasn't been a whole lot of opportunities yet. Usually this starts to clean up. It's only 10:30. We got lots of time here left in the day for this guy to clean itself up. So let's keep it pushing. Okay, big bar 26. 25 swallowing up back up into the range, leaving a big old wick behind. $26 even having trouble up here. No, by the way, that average range of a 5-minute bar is getting sucked down because look at all these bars. Since bar 21, the range has fallen pretty consistently off a cliff without any relief like we had on bar 20 as far as big range on a bar. Which, by the way, those orange verticals at the bottom are the range of the bar, whereas the red line is the average based on the last 10, right? So it's falling down into the mid-40s, but maintaining the mid-40s. We've been maintaining the mid-40s here for a while now, at least a few bars. But if this holds up, this price action, I should say, holds up for any longer, that ATR is going to dip into the 30s, especially when bar 20 falls off the end of the average, which takes 10 bars to do so, and we're already, getting there. All right, bar 26, just hanging out inside the wick of 25. So we're probably looking at something like this, which these don't tend to last very long. But in the meantime, we've got a bit of a single bar, not necessarily single bar. We've got a bit of a sideways range, though it is tight. Less than 60 seconds left here on bar 26. All right, 2 minutes. Be right back, don't go anywhere. All right. Big bar 27, about 2.5 minutes out. Yeah, Josh, you know, it's an in-depth question. It's almost certainly a context assessment issue or a nuance issue. I would consider a setup grading issue to be a nuanced issue. You know, I don't want to be that dude, but get in the tomb. We'll get you sorted out. That it requires more nuance than we can do here. Plus, I would need a lot more information from you. But based on what you gave me, it's almost certainly one of those things. So that's where I would focus. Okay, we got 27. Minute 50 out. So, before I left for 2 minutes, I drew this, and here we are still sitting in there, having trouble getting away from it. As far as width, we're looking at about 50, 45, 50 points-ish. In width, let's see if the bears can crack us lower, in which case we got to look at this as a potential soft bull channel. And if the bears could really just roll us over hard, I think right now that would be about best case scenario. Get that volatility going. ATR sitting still in the low 40s, being helped out a lot by bar 19 and 20 though. All right, tremendous. Watching 28. Man, these bars are getting small. About 30 points in range on a lot of these more recent bars since bar 21. So, it's been, what, 7? We're on our 8th bar since bar 20. In the next 2 or 3 bars, bar 19 and 20 will fall off the end of the ATR calculation. You can see we're now down to 39 on the average range of a 5-minute bar here, at least recently on the day. In the next 2 or 3 bars, that ATR, unless something crazy happens, it will dip to the mid to low 30s. Okay, you watch. All right, so we effectively have what I see as a big range. So I'm watching 28, not for a close, but to see if we can get another little pullback here. Now I'm looking ahead, thinking, okay, it's highly likely that ATR falls back to the mid to low 30s in another 1 or 2 bars. Width on this range, if you want to split the difference, Looking at maybe 50 points, 55-ish points. Yeah, as the bulls pull us in there, we're getting right to the midpoint of the range. Which I'm not into. 30 seconds out here until 28 closes. All right, rolling over into the open of bar 29, right at the midpoint of this single bar sideways range. Hey guys, by the way, the Apex deal, 49 bucks all in, no activation fee for the intraday trailing drawdown accounts with code BIG, B-I-G at Apex. That ends today is the last day. It ends tonight and it will not be extended. So don't gamble on it being extended because it will not be. So we're right in the middle here of this single bar sideways range. Market just has no clue which direction it wants to go here, which by the way is normal in a single bar, or not a single bar, in a sideways trading range that's relatively tight. It's not a wide range. And we see that ATR coming down, dipping even further into the 30s, sitting at 38 now. We're 3 minutes out until 29 closes up. And once it does here, we'll see 19 fall off the end, and then in another bar. So in 8 minutes from now, we'll see bar 20 fall off the end of the average for the ATR, and that number will drop unless we get huge volatility in the next 8 minutes. Question, Nico, I currently have 20 Apex funded accounts. My man, do you think it's worth buying more? So you can, and a lot of people will stock evals, even if they have fundeds. Now, what I wouldn't do is stack like 200 of them. That is typically frowned upon in the prop world. But just having some backup evals, you should. The way to understand this is not a Maybe you should, maybe you shouldn't. We'll see. It's just a math equation. How often do you cycle through your funded accounts? And if it's more often than the prop firm you're trading with tends to have really good sales that you're interested in, then you probably should have a backup set. Okay? If you're interested in the 90% single day pass at Apex that they are running or have been running for a while now, and you don't cycle through funded accounts very often at all, only a few times a year, then it wouldn't necessarily make sense to do so. But if you're maxing out your prop trading, let me put it this way. If someone is just holding on to the same set of funded accounts for 18 months, they're not maxing out. It's the equivalent mindset of you save every dollar you make and never invest in anything, including yourself, because you're fucking terrified. That people like that don't make a lot of money. They don't get rich. Just the way it is. But yeah, you want to make sure that you'd be able to use those obviously within 30 days. All right, so you see 28 and 29 rejecting kind of early, sort of at the midpoint of that single bar, keep saying that, of that sideways range that could almost be a single bar sideways range, but kind of technically isn't. It makes me wonder if we're going to roll over, take out the wick low of 27 and head down toward the wick low of 20, in which case I probably would get a short continuation setup somewhere along the way there. Obviously, we're not at that point yet at all. Right now, it is range, range, range. That is the baseline assumption. And this here, by the way, is the range. So I actually will take a scalp here, and I'm just going to use the wick low 27, which is very tight, but it's a scalp, which is the difference. Now, volatility, this is a great example. We talked earlier about using the volatility changes can adjust your sizing without needing to actually adjust your sizing. There you go. Without needing to actually adjust your sizing. You can adjust your sizing and let the market adjust your risk because of how many points of risk you need to put on for that particular trade. You can do one or the other or both. In this case, I'm doing one or the other. I'm using the market, which again, more than 50% of the time ends up being the case for me. Because, there's really only 24, 25 points of risk on here with an ATR of 39. Even though I expect it to come down, it's still, even after it comes down, if it goes down to 30, the ATR, still less than 1 ATR of risk here on this scalp. Though I don't imagine it'll be the fastest scalp in the world just because the market's a little bit slow, but faster is better. So you heard it, bulls. Let's go. Back up into the range, big dogs. Okay, we got 30 seconds till bar 30 here rolls over into the open of 31. Bears trying to press the wick low at 27, which is where I would pull it. They got within a tick or two. Let's see if they can take it out. Now, again, if the Bears can roll over, I would fucking love to see if we could head down toward low a day. Like, get away from these little ranges. Be a lot bigger opportunities. But until then, bulls, hold these Bears off. There's the rollover from 30 into 31. Let's see what these Bears got. So close. All right, take that little scalp off. Come on, man. I want some bigger opportunity. This. You see that ATR down to 36? Now let me see here. As we continue to roll over into new bars, that's going to continue to fall. Jesus. Yeah, down to about 30 on these more recent bars. Range. So, you know, it's not a big deal if they take out the wick low of 27 and head back into the range. You know, a lot of traders, they get tripped up and they get fucking pissed. What are you going to do? Risk the wick low at 20? You know, come on. You got to put your risk somewhere in a range. And that's why range scalping tends to have less edge, which is why I didn't size up. It was less points of risk, but I'm not going to size up on that trade to make up for that. I'm going to let it be as is. When volatility increases, I'll let the market size up for me, even if I don't have to size up my contract size. So, still hanging out here. Range. FX. No, this is not gold. This is Nasdaq. Big dog. Don says, thank you for reposting the order flow and reading the tape videos. Those are on my playlist for trading skills to learn. Yes, sir. Yes, sir. You know, when I made those videos, I gotta tell you, I was, people bring up those videos a lot. And I'm like, I'm glad they were helpful because I was just talking about what I know from Stock World, which is level 2 and reading the tape. And people seem to have learned a lot from those videos, so it's good. I love it. Question, would you say scalping keeps your interest higher in the market? Yeah. Yes, 1,000%. Look, let me kind of explain something to you guys. You should long-term make money also on your scalps, but just for the sake of discussion here and making my point, in a world where you were only able to, let's say, break even on your scalp trades, again, I'm not saying this is the goal, just hear me out. Again, you should want to make money on your scalps long-term, but picture this for a second. Let's say your intraday trades and your day trades are the things that are paying you, and you look back on your scalps over the last like 2 years, and you're like, oh shit, my scalps covered my commissions and fees and like pretty much broke even on the scalps. That, if that were the case, I think that might be better to still take them, because you broke even on them, right? You didn't lose, but what did it do? It probably helped you be better with your day trades and intraday trades. Now, add in the fact that you can make money on the scalps over a big sample size. Even if you still make more off the day trades and the intraday trades, even intraday swing trades, not only are you staying interested in the market, it's forcing you to read price action because you're scalping. You are enjoying yourself more because, I mean, let's face it, we want to be a part of this, right? I want to be in trades. That doesn't mean I'm just going to put on random bullshit. I have to be able to make sense of it. But yeah, I think scalping, as long, the problem with scalping is that a lot of people just aren't very good at scalping, which is normal because it's the hardest thing to do. And then they end up giving back all of their profits from day trading, intraday swings, etc. That is a huge problem. In that case, you need to put scalping on the back burner. But in a world where, just to prove my point, even if you did just break even on the scalps, I mean, wouldn't you agree? I would think it would be better to still take them because it will help you make more money on the day trades and intraday swings. And then, by the way, eventually, if that were you, you would get to the point where you get just a hair better at setup selection and risk management selection, where you are making money on the scalps, more than just covering commissions and fees. And now you're making more money on the intraday swings and the day trades because you were so engaged from all the scalping. And now you're also making money on the scalping. Long term. Mid and long term with a bigger sample size, right? As that sample size gets bigger, which is obviously best case scenario. So now you're staying engaged and making money on the thing that helps you stay engaged. Now, if you just fucking hate trading, I don't really know why you're here, but then this doesn't sound attractive to you because you're like, more trades? I don't want to do that. Well, in that case, I don't know if being an active day trader is really for you, because you got to understand, you still have to show up and do this every day. Sure, you can make a lot of money, but if you don't like doing it, then is this really the occupation for you? You can make a lot of money doing a lot of different things. All right, new high a day. And basically immediate hesitation there out of the bears. All right, I've got a drink that just got here. Give me 1 second, be right back. All right. Welcome back. We are struggling with that high of the sideways trade range here. You can see the bears easily taking some control, bulls hesitating a lot. This is just highly representative of a sideways range. Bulls take out the wick high, bears immediately step back in, bulls step out. So you can see ATR down into the mid-30s as we talked about. Falling, falling, falling. We got that wick high of 32, high of day. But really, this is a big sideways range at the high of day. So each little individual wick can easily get taken out. The real question is, do the bulls actually succeed in taking it much further, which has a relatively low probability of being able to do so, at least on the initial break. The more, again, confirmation, I hesitate to use that because it implies certainty, but the more confirmation you get, a couple of closes above the previous high of day, wick high, clean closes, bull bodies consecutively, the more willing I am to look at it and say, okay, this is starting to get more aggressive, looking more and more like a bull trend. Time to start getting long. In the meantime, though, it's easy to look at this and start betting, yeah, hey, this thing's going higher almost certainly. It's not almost certainly. It is a sideways range. Now, of course, you zoom out a bit, you can draw a couple of things. You could say, yep, sideways range. But also, right, maybe, but it's developing more into a sideways range, kind of flattening out as we go. Okay, could we return to a big soft bull channel? Sure, of course we could. But when you can draw too many things, I tend to err on the side of range, range, range. 90 seconds out till we get the close up of bar 34. I don't make the call. Somebody in the chat makes the call. And we could use that right about now, man, because volatility is now 31 on the ATR. Good Lord, come on now. We got that wick high of day, 32. Bulls slowly pressing into it. This is a very tough short, by the way, because it's so tight. It's a high probability that the bulls are able to take out the wick high. And even if they don't, hindsight means nothing, right? You have that positive drift from the secondary look being the soft bull channel. All right, bulls taking out the high of day by 5 ticks. See what I mean? They can grind and take out that high of day, and if you're using that to manage risk, it's just a whole lot of slow positive drift, grindy stop outs, which is why I didn't short, 33 or 34. So I'm watching 35 now. We're 225 out from the close. We basically got, this would be the first bar, by the way, closing outside the range. If it can close above the wick high of 32, we'll see if it can. Millicent, you use code BIG when you bought them? Okay, we got 35 seconds out. Again, this would be the first bar closing outside of a sideways range, which makes it the early trade, if we even get a clean close to begin with. Bears wicking us back here a hair. So let's see how clean the bulls can close this up, how clean they can close it. And I want to be ready here just in case. Massive bull insecurity. All right, watching bar 36. Man, this is something else. This is the range that we're looking at here. That's it. That's what it is. Now the question really becomes, can the bulls break this higher into a actual legitimate argument for a soft bull channel? Okay, we got a minute 15 left here on bar 36. Hanging out right at the high end of that previous sideways range. We'll see if that stays in play, the range, again, or if the bulls are able to bounce us here and turn it back into a bigger, soft, well, sort of for the first time of the day, actually fulfill that big soft bull channel, because we've been seeing it. In hindsight, it looks like it is a big soft bull channel. The problem is it's really been sideways ranges with that look as a secondary look. So let's keep an eye out here. 40 seconds out on 36. So looking to the left, you see the wick low of 33 and the wick low of 31 are really the only somewhat logical areas to use to manage risk. The most logical is the wick low of 31 to get long for a limit order entry reversion scalp. Okay, but 31 is so damn far away right now that you're basically risking the entire range to get long in the upper third of that existing sideways range, which for me isn't, that exact situation is not a trade I'm looking really, to put on too often. But if we can get a deeper pullback, I could become interested, but it's certainly not the highest quality setup or trade scenario in the quiver. But ATR now down to 31. We'll see if that continues to fall. The range on these bars has just disappeared. Trump, we could really use a tweet right about now, big man. Oh, man. Don't look. Don't look at the ATR. It just dipped below 30. Down to 29 here on the ATR. By the way, 37 closing up as a tiny little bull body, effectively a doji. So you've effectively got two ranges right now. You've got a range inside of a bigger range. They share the point of what you could call resistance. I would call the upper third of the range. And then you basically have this bigger range with a tight single bar range inside of that. Typically for me, when that's the case, unless this becomes very long-lived, I like to look at it like this. Just like the big range. Man, I'll tell you what though, this low volatility stuff, when the market kind of dies in volatility, like ATR, you know, it could be worse. I don't want to complain too much about a 30 ATR. But when volatility kind of dies and the market goes sideways, this right here, I'll tell you what, is the downfall of so many traders. Because, like, let's be straight up, guys. Like, none of you guys are talking. I know you're bored as fuck. I'm not happy about the market doing this. It's boring, let's face it. The market's doing fucking nothing. If you can stay out of shit when the market's doing this, you are halfway there. We got 38 testing the high. Again, high of day now is bar 35. Hey man, by the way, if you haven't yet, I appreciate you doing so. Press like here on YouTube or dislike, big dog. Whatever you got to do to feel good about yourself on a Tuesday, hit it. Hit a button. I appreciate it. Okay, so as we continue to sort of slowly grind higher, the question now kind of becomes, okay, do we grind into a a tight bull channel, I'll call it. It's pretty early to say that, to be straight up. You got that wick low of 33, 37. The wick highs of 32, 35, barely making progress to the upside here. You know, you take a new high a day, you move 5 points, and then you fade back into a sideways range. So the more and more the look improves, the more I could start scalping here, but we're just kind of now getting to that point. Damn, Bears, come on, man. Someone light a fire. Let's go. There we go. Starting to get sort of into scalping territory here. And the further we go, the more bars we develop in this little channel, the less I look directly at 31, the more I can start to kind of make sense of using 33 to manage risk. Is it optimal? No, I wouldn't say it's optimal. I would not grade it as A+ by any means. There, limit order reversion scalp, use the wick low at 33. Things are very tight, ATR 28. Now, as I always say, when the ATR starts dipping below 30, our job starts getting a little tougher. Below 20, it starts getting quite a bit tougher. Below 10, it's time to walk away on a 5-minute NQ, for example. ATR sitting 29. Man, this is slow! I'll tell you what, man. A slow day in the market is better than a good day at a 9 to 5. Straight up. Well, damn, bulls, let's go. All right, there's the rollover. We got bar 40 rolling over into 41. ATR now 26. There we go, a little bit better than half an ATR on that scalp. Little trades, man, moving on. Moving along, keep it pushing. 41. Pressing into the sort of flat top here, high into this, I would almost call this a wedge now, but trading range / wedge. There's a new high a day. Now expect expect some hesitation here. Not for me, not worth getting short on hesitation because it's a wedge with bullish drift. The two looks right now are sideways range and kind of very, very soft single bar soft bull channel. So it's got drift to the bull side, of course. I mean, you zoom out, of course, right? So I'm not really interested in too many trades to the short side until I got an actual continuation look to the short side. Especially not against the drift. It's going to make your life, when there is drift like this, even if there are ranges mixed in, it's going to make your life a lot easier to trade, even just if they are scalps with the drift. It's just a hell of a lot easier to make money for doing it that way. All right, halfway through bar 41 here. Minute 23 out. Let's see what we get here out of 41. Now, as far as getting long on a close like this, I would need at least another bar. Because it is so tight right now that betting on a huge breakout on the first bar after, really since bar 32, I know is a sort of a foolish trade. It just ignores the context of volatility based on the last 9 bars. So I would need to see 41 here close up clean. And if we get that, we'll watch 42. Beautiful. All right, bar 41 closed no wick whatsoever at its high. Watching 42. Let's see. By the way, if you're just popping on in here for the typical session time, little bit of a change. I'm streaming market open. So make sure you're checking in market open. And that's what the schedule is going to be going forward. All right, 42, 4 minutes out. You see this hesitation on bar 42? To the upside? Yep. Yeah, that's why for me, it's very tough to just get long on 41. Because, realistically, you're kind of just betting that 42 just pops higher. And where is that confidence coming from? All we've seen is this. So I wanted to do so first, then that's enough. Then I would get long on the close of 42. Closing as a nice clean bull body, of course. Getting hesitation here in the first half of bar 42, 250 out. Let's see what the bulls can put together here in the second half of this bar. Come on now, Bulls. Minute 20 out. Bulls hesitating. As clean as 41 was, you know the Bears are looking at this and saying, yeah, okay, I'll short that and fade it back into the little channel we're seeing. And the Bulls are letting them do it. So let's see here. We got about a minute out until this bar closes up. We'll see if these Bulls can step in. There's still plenty of time to clean this up. We'll see if they can. Even a small bull close, I'd be okay with. ATR now 27. It's getting down there. Volatility going down, down, down. Inside close out of 42. Maintaining that little channel. All right, guys. Hey, I appreciate you joining me here today. Don't forget, Apex. All in, 49 bucks, no activation fee. That's the cheapest all-in price Apex has ever run on the intraday trailing 50K accounts. Code BIG, B-I-G, is how you ensure you get that. So use that code when you sign up for each individual account. I will see you guys tomorrow morning. Market open. Hang in there, man. Hang in there. When the opportunity presents itself, and it always will, hit it. Until then, stay patient, let it come to you. All right, guys, have a good day.